Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Vivek Raman from Etherealize, the institutional BD marketing and product arm of the Ethereum ecosystem, as they call themselves, is our guest. Great conversation with Vivek. We debate a little bit about the readiness of Ethereum L2s and the viability of the Ethereum roadmap, competition with other layer ones, and what makes Ethereum stand out. It's a great conversation I know you will enjoy. We'll also talk with our good friend Beimnet Abebe from Galaxy Trading, as always, about markets. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So we've had a little bit of a Bitcoin and crypto liquidation shakeout that happened over the weekend. Bitcoin's now in the 112 area. Again, been in this area a long time.
So I mean, we've rebounded a little bit today. Trading closer to 114K as we speak. You had a lot of liquidations over an illiquid, overnight weekend session, basically Sunday night. And that was driven by some selling flow into thin liquidity that caused liquidations. And so, crypto did trade down. You've also had a bit of equity weakness today and yesterday with, SPUs being down in back-to-back days. I think there are a lot of things, driving that price reaction. But high level, we've gone a long way over the past couple of months. We've essentially rallied for the better part of 6 months now in equities. And so, I think they're taking a little bit of a breather because, there's a ton priced in, and the positioning is kind of like at extreme levels, from CTAs, from retail. And so, you're just having a little bit of a pause in the equity price action.
Yeah, I think it's been, one of the sort of stock market or equity market stories that we've been seeing is these monster AI like data center deals. Like I think what Oracle has was it 100 billion or something crazy they announced? Is how much do you think the AI, like broadly speaking, AI hype either from the the Mag 7 or the AI companies is like in the driver's seat for equity markets at this point?
It's squarely in the driver's seat. I think, and when folks think about what's going to drive growth on a forward basis, like it's really like AI companies and all of the the various downstream companies that are influenced by how much capex these companies are doing and all the power that they need, etc. So that's largely driven the price appreciation in the broader big indices, and high level as well. Like the Fed easing when they don't really need to is also helping backstop risk a little bit, and it kind of seems like the administration's okay with running things hot. And so, equities are moving higher. I do think that the price action in metals is super notable. Gold hitting fresh all-time highs this week once again. We're off a little bit today, but I do think that there's just a big rush from domestic folks, international folks into gold, as a debasement hedge essentially. And that's caused things like silver, platinum, and other kind of related metals to also, perform well. And that's in an environment where, the dollar index is like, fairly unchanged. Like Euro's still kind of right around 117-ish, 117.50. And so it's not like there's been a massive like move lower in the dollar. It's just, gold is becoming like a staple in a lot of portfolios. You can see the accumulation in places like China. Retail's involved as well. So it kind of seems like it's becoming like a core pillar of how folks think about managing a portfolio for the long run.
All right, two questions about that. Is that at the expense of U.S. Treasury debt? And two, is comment on the fact that last week during the Fed cut 25 basis points, but the long end rose, right? Like, are these all tied together with gold rising, the long end rising, central banks and foreign's stacking gold?
Yeah, no, it definitely is all related. I think on the Treasury issuance side and Fed credibility side, there's a lot of folks that think about what the end state is, and the end state is more money printing, right? Like if you believe that the government can't ever like stop printing deficits, right? Like then that means that by definition we're going to have to print money to finance debt. And so if you know that that's an eventuality, and you know that the math gets harder and harder every day, that you don't take the hard kind of decisions, then gold's like a pretty easy trade, right? Because it's theoretically it's more finite than dollars. Now, in terms of like why the curve or the back end of bond markets didn't rally too much, well, if you're really thinking about investing in treasuries that are greater than 10 years, like your primary focus, or at least for a lot of people, is preservation of purchasing power, right? And if you think that having like easier monetary policy in the short run will come at the expense of inflation over the longer run, and you want to be protected from a purchasing power perspective, then you probably need a little bit more term premium in the curve. And so, it I think it goes back to like specifically what Powell said during FOMC. Their tools are only able to do one thing at a time, right? If you want to cool inflation and simultaneously, improve the labor market, you can't do that, right? And like they have limited set of policy tools, and so like trying to address the weakness in the labor market is going to come at the expense of risking more durable inflation over the long run, and that's kind of the trade-off, and the back end of the bond market is reacting to that.
Cool. Well, it's just interesting because remember the start of the year, I don't remember whether Secretary Besson actually said this or if it was sort of just promulgated as their goal, that it was like getting the 10-year down, and that I know the president has been, one of the things he's been saying publicly in pressuring the Fed to lower rates is that he wants mortgage rates to come down. They haven't meaningfully come down, and it just wonders, like, how long can the administration sort of push for this reduction in actual rates as a consequence of Fed action when it shows that Fed action is not really doing it, right? Do you think they'll come to a sort of a come to Jesus moment where they have to acknowledge that actually the Fed rates might not be the cure here?
I don't know if that there'll be a come to Jesus moment in this administration, not because this administration's different than any other administration. It just simply has to do with the ability to kick the can down the road and assign responsibility to other folks. And so, there are still tons of tools that will keep bond markets and FX markets reasonable for the foreseeable administration, basically, right? There are things they can do, like lowering the rate that the Fed pays on two banks, basically the interest on reserves, like IOER or IORB as it's known, on interest on reserve balances, sorry. And so they could lower that below where the Fed's setting the rates, and that would force a bunch of banks to like enter the treasury market. They could change other rules to allow for more treasury purchases. In addition, like they can cut back on back end issuance and make it more front end issuance. And like, so there are things they can do. They can stop QT, like, et cetera. So like there's a lot of like policy measures that can be implemented between the Fed, Treasury, and the administration, that can basically kick the can down the road. Now, I will say that, Besant started the administration being like, we're going to take deficit spending to 3% of GDP, which is long run sustainable, right? And, basically, 3-4 months ago, he switched to 4%, right? And so, it's hard to like take this administration that seriously because, they flinch when they see weakness, right? And like you had the huge tariff sell off and it's like, I'm going to, backtrack that a little bit. Well, if you want to pass like sweeping changes to the government and you want to spend $3 trillion or $3+ trillion, like it's going to come at the expense of something. And like, yeah, your deficit spending objectives have gone out the window and like you're not that credible in terms of being able to spend less. But the problem is there's no other solution. Like what, like Democrats are going to come in and spend less money? Like, I just like every administration has an incentive to spend more money.
Yeah, you've talked eloquently and at length about this on this program about the political incentives are totally misaligned for a long-term fiscal soundness.
Yeah. And as long as we're still in 2-year congressional, cycles and 4-year presidential and 6-year Senate, and everyone's focused on re-election and, everyone's focused on themselves and like the immediacy, then, stuff's not going to change no matter who's in charge.
There you go. Well, Beimnet Abebe, my friend from Galaxy Trading, as always, thank you so much. We'll see you next week.
Thanks for having me.
Let's go to our guest, Vivek Raman, CEO and co-founder of Etherealize. Vivek, welcome to Galaxy Brains.
Thank you for having me.
I've wanted to have you on. We've been messaging, and it's so interesting and important, I think, for the Ethereum community that Etherealize exists. There've been a lot of complaints that there wasn't a strong advocate for Ethereum sort of out in public, and it seems like that's changed with Etherealize. Tell us, what is it?
I think my favorite quality about Ethereum is that it is a decentralized smart contract network, and it is the most decentralized, and it's global, and it's stood the test of time. But that comes with downsides too. And the downsides are you don't have centralized business development, marketing, product entities. Although we had iterations like 2017, 2018, Joe built up an amazing machine with consensus. I mean, there have been a lot of different iterations. You had EEA that has a voice, but we just felt last year when the ETH ETFs launched and Larry Fink was out there saying that every stock and bond will be tokenized, the default choice should have been Ethereum, and people should be like, oh yeah, great, this benefits Ethereum the most. Right. And it didn't. And you started to see all these other competitors rise up and be very centralized and be very vocal and loud and go to policy. And so we said Ethereum should have a voice. It's not going to come from the EF. EF's a big decentralized entity, and it's wonderful and amazing in R&D and steering our multi-decade roadmap. So let's form this thing called Etherealize and go be commercial and go pitch to where we think the product market fit should be, Wall Street. That's when we mobilize. So I think we're just filling a need.
Yeah, I love that the word itself is a verb, which I think speaks well to what you're doing, right? Like you're trying to ethereal is even better, but like Ethereum-ize, you're trying to do it.
We're trying to actually make it.
You're not a foundation. You're trying to like take active work.
We're trying to actually create products and infrastructure and drive adoption. I mean, if this technology is here and it's been battle tested and it's built, the saddest thing would be if we don't end up using it and we don't actually do the thing that blockchains can do, which is upgrade financial system to start and then all other systems with this new internet rail. So we're like, okay, let's get active and let's actually mobilize.
Yeah, it is Ethereum by far in terms of it has the plurality, I guess. I think it might just barely have the majority of stablecoin issuance, but it certainly has the most of any network. And it also has the most DeFi TVL by far. Yeah. It's certainly the oldest of the general smart contract platform blockchains. But it was you were talking about last year in the ETFs. The Ethereum ETFs really underwhelmed last year. They only just started doing well, and they have done well. They've outpaced Bitcoin for many weeks in a row. I mean, almost probably 2 months at this point.
Yeah, it's been staggering.
Yeah, all at once, sort of in that run from the 1,500 area in April to where ETH is now, up in the 4,000 range. But you're right. It seemed like that is the default. You had the Enterprise Ethereum Alliance, which you mentioned. You had JP Morgan had built all this stuff on an Ethereum fork, so Ethereum technology. And then you also had the election, which from a regulatory reform standpoint, should benefit the applications built on Ethereum as much as all of its competitors and more than Bitcoin. And yet it was stagnant all year. So people were very excited that you were out here now, and you were funded by an original in-kind funding. Is that right?
We got a small grant to start. Again, EF is very independent, and again, that's one of the most respectable things. It'll transcend all political regimes. It'll transcend time. So they gave us some signaling. They said, okay, there should be a lot of Etherealizers out there.
Yeah.
You're one of them.
You're doing the right thing. We'll get behind you.
Yeah, they gave us a small grant. Vitalik gave us a small grant.
Right.
And the important part there is Ethereum's legitimate, but when you go to Wall Street and institutions, you need to show legitimacy. So having some sort of at least initial backing and saying we're an independent entity, we have the mandate to go bring real adoption, real assets onto Ethereum. That was a powerful thing.
Yeah, and so now you've just announced a new fundraise. Tell us about it. And congratulations.
Thank you. I think it's really important. I think that the first 6 months of Etherealize, honestly, before we even launched, it was doing a lot of discovery and seeing. I needed to first convince myself before going and staking a bunch of reputation on it that Ethereum was the platform where institutions should build. Like from first principles, not being a maximalist, do I actually believe in architecture? Do I believe in L2s? The answer was a resounding yes, and got a lot of market feedback for the first 6 months. Went and talked to hundreds of banks, institutions. A lot of my old network that I worked on Wall Street 11 years and had a really good network, so just like ran different permutations of how Ethereum could be used by them. Once that was validated, we're like, okay, let's go mobilize and launch Etherealize. And the first order of business, because Ethereum's narrative was a little bit just out of favor. Ethereum wasn't front and center. ETH, the asset, was not front and center. That shouldn't matter for the technology, but it does. I mean, at the end of the day, blockchain networks have underlying assets. So we're like, okay, we have to actually start with education and really do a big aggressive blitz. That blitz was across, educating institutions. It was across rallying the community. We did a lot of work with policy, from talking to the SEC and submitting memos on transfer agents to testifying in front of Congress. I got to testify on behalf of the Clarity Act, which was pretty cool. Ethereum wasn't represented in Congress before, and so we got to be one of the first ones to do that. So we did a lot of upfront education. We did a lot of education on ETH, the asset. I think ETH's a store value asset, and it belongs alongside Bitcoin in a portfolio. We wrote an industry report on that. A lot of the treasury companies are referring to that or using that. So it's been cool to see that adoption. But then Ethereum is more than just a narrative, and it's more than just like a concept. It's something you can build on. So the way to, Danny Ryan ended up joining as a co-founder, which is a dream. Zach Oberon, one of the best technologists one of the best smart contract engineers out there, joined Etherealize. Grant Hummer, who was very, very early on to Ethereum, joined us. So we wanted to transition from just being a voice for Ethereum to actually building the products and infrastructure so Wall Street can use Ethereum. And that's why we needed real capital for that. So in parallel, we said, we're independent from the Ethereum Foundation. Let's go raise capital from the best in the Ethereum ecosystem and go build the tools and become an engineering factory. And that's what we're now going to transition and focus on going forward.
So I saw the release, the announcement. You raised $40 million, led by Electric Capital and Paradigm, two of the biggest Ethereum ecosystem investors.
Yeah.
That's a lot. Congrats.
We appreciate it. The thing is, Ethereum's real. There's a lot to do on Ethereum.
Yeah.
There's infinite things to build. There's, I think, for a long time, blockchains were a solution looking for a problem. Now we know what all the problems are in the financial sector, and we actually can solve them. And the technology's ready. Layer 2s are ready. Ethereum's ready. Even things like privacy, which we're working on, is ready from a regulatory standpoint. So we want to blitz. This isn't like it's not a slow moving, let's take 10 years to do this. The time is now. So we wanted to raise a war chest. We wanted to get the brand and the best and deepest Ethereum aligned people behind us, and then go out to industry and help them build solutions.
I love it because I totally agree with you on traditional capital markets and blockchains. And I know in the release you talked about building tools for tokenized assets. You were talking about on-chain applications for fixed income tokenized assets, a ZK privacy area for trading and settling tokenized assets. Yep. Tokenization, like how key is that to your view of Ethereum's future?
I think it's product market fit. I think that it's now no longer controversial. I only know this because I've tried this same Etherealize thing for the last 4 years. Since I left Wall Street, I was like, I learned about Ethereum, got plugged into the EF, I met a lot of people, and I was like, this is where all assets should be digitized and settled. And for 4 years, I would walk into banks and my friends at buy side, and they would just kick me out and be like, no. So I've tried this for a long time. now it's flipped to where I think everyone needs a tokenization strategy. Everyone agrees that assets should be digitized and represented digitally. Think that public blockchains are finally ready to be the place where assets can be tokenized, because we've tried for the last 10 years iterations of tokenizing assets on private blockchains and consortium blockchains, and like it just hasn't worked because you're not going to hit the network effects. It's intranets versus actually putting everything on the internet. Now we're at the internet moment. So I think tokenization is the product market fit that we want to focus on right now. I think Ethereum's ultimately a lot bigger than that. I think that it'll be a platform for AI agents. I think that gaming can move on, social can move on, but we want to stay focused. And one really, really clear thing that we have, I think, an edge in, just given our team and our background, is financial capital markets. So that's what we're going to start with. And yeah, everything should be tokenized. So we're going to try and tokenize everything.
What is the benefit to either an issuer or an investor in having stocks, for example, in a tokenized format rather than in a traditional format?
I think the real benefit comes because the thing I want to be careful on is U.S. capital markets are the best capital markets in the world. So a lot of things are already very efficient. So we need a clear step function that's better. So this whole experiment only works if all assets are tokenized on public blockchains. Because then what you can do is you can take tokenized stocks and tokenized bonds and mix them together into a tokenized ETF. You can take all these different structured products and create them using simple smart contracts. Like the financial innovation that can happen is much, much better if you can bring all types of assets on chain. Individually, stocks are already pretty good. Stocks will obviously be better if they can trade 24/7, if you have more access and global distribution, if you can program them, if you can use them as collateral on DeFi lending apps. So that's all very clear and obvious, but the key unlock is we need to bring multiple asset classes all and make them all fungible and make them all usable within applications. Actually create utility for tokenized assets. I think tokenizing something and putting it on a blockchain was like step one, and it was very important, but that can't be the end state. The end state is these things have to actually have utility and activity. And that's why we're focused not only on the infrastructure layer, which blockchains love infrastructure, but we also need to focus on the application layer.
Right.
So applications using tokenized assets are also equally important.
Yeah, I think it makes a lot of sense. I think the transparency and efficiency of blockchain, I kind of think about it like if Wall Street, when I try to figure out how like pre and post trade works on Wall Street, it feels like I need like an archaeological degree to uncover it.
It's hilarious.
Like, you know how they say, like, I don't know if this is actually true, you're a New Yorker, but like if you dig down in New York, you find like old versions of the city. Have you heard that? That like they would just build on top of it. Or that there are actually like ancient versions, like, yeah. And that's kind of what Wall Street feels like to me, even to the extent that you have like T+1 settlement today for stocks. Like it's all just like hardwired in on top of another thing hardwired. Everything's hard-coded, right? There's no formulae connecting it.
Everything is hard-coded. Everything is... Yeah, you still have like fax machines somewhere in the mix, phones somewhere in the mix. Some things are in Excels that are scattered around different...
You're uploading a CSV over like SFTP instead of just like an API.
I think everyone knows that. And I spent 10 years on Wall Street. So it's not like... And I traded credit products. I traded bonds. I mean, I saw... The biggest innovation was I went from settling T+3 to T+2. And after 10 years, I was like... That's the best we got. I know. I got to go find something else to do.
It just feels like if we rebuilt the system from scratch, you would definitely use public blockchains.
But there was so much inertia.
Yeah.
And so much regulatory uncertainty. And the system was good enough for a lot of asset classes, especially in the US, that honestly you need a real forcing function. Now's the forcing function. Like now all the winds are at our back. Like the regulatory landscape is, let's actually upgrade the financial system. Banks are racing new blockchain strategies, deploy on public blockchains. So, I mean, you see these opportunities. I don't know. When's the last time we saw a big market structure shift? It was like 30 years ago, around .com. So now we have that shot, and that's why we need to go really, really big, really, really fast, and actually try and effectuate this change while the window's open. Window won't be open forever. So while it is, let's do as much responsible innovation as possible.
Yeah, I agree. It kind of feels like, especially Chair Atkins and Commissioner Peirce at the SEC, they've sort of like put their foot in the door and kept it wedged open now. It's like wedged open. You can see through the other side from a regulatory standpoint that it's possible. And they're kind of begging people to come kick it open, right? I mean, if you read and listen to what Chair Atkins has said and what he said in his Project Crypto speech, he's basically calling the troops like, okay, you're going to be allowed to do it. Like, show us what you're going to do. Like, help us let you do it. And so I think it is really important. The time kind of is now. I feel like actually, I mean, depending on what happens with the administration, you've got 3.5 years of the current administration, and obviously whatever other issues people have and issues there are, like, set aside. On crypto and on crypto regulatory stuff, it's very clear that like the window is open. And so I agree with there's some urgency.
And it needs to be done responsibly. That's the important thing. We had our shot last cycle and didn't go so well. So like we're not going to get infinite shots, and it's too good of a technology to not have it reach its full potential. So yeah, I mean, I applaud the new SEC. I applaud Congress, the whole government for being open to this. But they're all making a bet. They're saying that crypto technology actually is better. So I mean, part of Etherealize's thing is let's show that it actually is better in a responsible way, working with institutions, working with their needs, solving their problems. Actually, just Ethereum should be a backbone. It should be invisible. It should just be a system that's abstracted away. It shouldn't be like some front and center flashy thing. It's just infrastructure, but it's global infrastructure. And like if it's done correctly, then once you rewire everything with Ethereum, you can't go back. So the system's just upgraded. Just like when you put the world on the internet, no one's going to go back to the pre-internet era. True. So that's what we want to achieve.
No one's like, can I call a horse Uber over here?
Yeah.
Exactly. I agree with that. I think one more sort of question here on this topic. How important is it to Ethereum's future success that you mentioned? We talked a lot about Wall Street and tokenized assets, but say social, these things, like none of them, I feel like, and this isn't a story of only Ethereum, like all of the general purpose blockchains, to the extent they've had adoption, and many have, several have, I should say several, I wouldn't say many, several have, and Ethereum certainly has been very like crypto native, right? There isn't like we're still waiting for the Fortnite on the blockchain, right? Like we're still waiting for the social media to really take off. You got Farcaster, Bitcoiners use Nostr and whatever, but like, again, not like a true mainstream use case outside of really what most people use them for, which is like swaps and lending.
Yeah.
How important is it? Like, can we continue with just like launch pads and lending and DeFi lending, or do we need to deliver this for Ethereum to succeed in the future?
Yeah, the thing I don't want to downplay is how important all those crypto native applications are. Like Ethereum, at the end of the day, our lead, Avishal says, he said, the world computer still is the end state. It's just you have to do a lot of things to get to the world computer, and capital markets is one step on the way to the world computer. So I don't ever want to like downplay the cypherpunk vision of where AI agents will be using Ethereum, and all our social graphs are on Ethereum, and Fortnite should be on Ethereum, and gaming should be. But I think the most important and impactful thing is to bring the financial sector and financial infrastructure and the world of assets digitized onto Ethereum. That's just the biggest and clearest product market fit. And once you do that, then people can use this Ethereum economy to go build everything else. But I think we flipped the order for a long time because you didn't have regulatory clarity.
Yeah.
Like people ask why now, and it's a pretty simple answer. Just now we have the regulatory air cover, and so everyone's rushing in. I mean, Tom will use this ChatGPT moment. We always thought, ChatGPT moment was Genius Act passing and people saying, okay, public blockchains are open for business, so now we can use them.
Yeah.
It's that simple.
I think it makes a lot of sense. And I agree. The future of these things, well, I would say that capital markets are particularly suited to move on chain because these are ledgers, and so they're sort of financial in nature. You can store other things, like you said, social graphs in a ledger, like that is effectively, it's similar and doable, but they're financial ledgers, even at their core. All their native assets are financial. And all of Wall Street stuff, despite the way it may be an interlocking series of tubes, is basically natively digital for the most part. So it's not like you're trying to tokenize a house. Right? Yeah. Remember all those efforts to tokenize real estate, and something may still come of that, but that was a lot harder because it's like, well, if I lose my digital keys, I haven't lost my physical keys. Yeah. So like, where's the connection, the provenance between the physical and the digital? But like a stock is a ledger entry of ownership, right? It seems perfectly ripe for.
Exactly. A transfer agent, it's archaic tech. And that's why, SEC's put out guidance saying, okay, maybe we should use the blockchain as a transfer agent. That's why you're starting to see.
They could literally just run a node and pull the data down.
Yeah, exactly. And it's distributed. It's not controlled by anyone. It's actually decentralization just means security. So, the more decentralized you are, the more secure it is. And so it's just harder to take down if you have these thousands and thousands or tens of thousands of nodes everywhere. And that should be better than a traditional transfer agent. So, the thing we had to prove is that blockchains are strictly superior to the way that the existing financial system is run. And I think we're finally at that point. So,
It does seem like the tech is more ready, obviously, than it's ever been. The regulatory door is open, and the entrenched intermediaries are not gatekeeping as hard. There've been a little bit of gatekeeping still.
There's been a little bit, but I've pitched a lot of. I'm a very positive sum person. If you tell anyone they're going to lose their revenue or jobs or something, like blockchains aren't a charity. They shouldn't just adopt it because it's
Right.
some idealistic thing. No, I mean the banks will make more money if they by cutting costs by adopting blockchain technology. It's just like every bank is adopting AI to cut costs and then create new revenue lines. Blockchains create new revenue lines. This is why I'm sure we'll talk about layer 2s, but layer 2s allow for a high margin, profitable blockchain that you can have that's plugged into the Ethereum network. Why would you not have that as a bank versus use a closed system where you don't have network upside? So why would you not have digital settlement and have faster velocity of trades? It lets you make more money with trade. It's just, you flip the question and it actually helps the banks.
Yeah.
So
it does seem like the modular design of Ethereum's ecosystem, I'll say today, but also its roadmap, which is very similar, by the way, to what mostly Bitcoin's design theory has also been, which is to maintain and preserve the fidelity of the layer 1 blockchain and extend its composability and features through these layer 2s. It does seem like that is a very simple concept that makes a lot of sense. It sounds like intranet versus internet, right? Like, sure, you got the Galaxy intranet, but it connects to the internet, like in the end. And I guess with the L2s, it's rollups in particular, it's actually a stronger connection than just that, right? It's not just a permissioned area with a bridge to the permissionless, but it's actually relying on the permissionless L1.
it is the way I look at it is I just fundamentally believe that the end state is not just one single purpose blockchain where it's one size fits all. That's just not how society scales. I mean, I look at the U.S. a lot. You have 50 different states. They all have their own different governance, but they all have shared security. If you want to look at it of U.S. nations, you have companies that build in the U.S. because you have the best property rights in the U.S., which is like Ethereum, but you can customize as a company and make all your profits. I mean, yeah, society scales modularly. In this sense, L2s can be the whole spectrum of what you want them to be. You can have fully permissioned, like very, very, very weak connectivity to Ethereum. That's maybe you'll have a social network or something that needs super high TPS there. But if you want security of Ethereum, you can have full composability with Ethereum layer 1. You can fully inherit the security of L1. You can have an escape hatch, so all your assets will always have property rights on L1. The fact that you can have this marketplace of L2 designs is really, really powerful. And then every bank, every company can choose their iterations. And yeah, I mean, that seems hard to compete with in the long run.
Yeah.
Customizability is important.
I had messaged you about this, and,
Yeah,
I've complained about it as well publicly, that I worry that the Ethereum L2s are extractive rather than aligned to the L1. And there's no doubt that they extend the Ethereum technology stack, and that they can be, composable back and forth, that the address format can be identical, so like one set of keys, which I think is very powerful, by the way. The fact that I can have one set of keys control assets on Base, and on Linea, and on all these other on Optimism, and that's just one of the things. I mean, the design is elegant for sure, but one of my worries so far has been that increased usage on the L2 is not accruing value to the L1. And one of the data points I was using for this is Base, which is the most widely used L2, wholly controlled by one company, effectively a computer in Coinbase's basement. Which, to your point, isn't a wrong thing. That's a feature.
That
you can create one like that. They paid in Q2 $445,000 in transaction fees on the L1, a combination of blob fees and transaction fees, to post their base data to the L1. At the same time, they charged, I guess, or received transaction fees of about $14 million from their base users. So it's a huge multiple between their cost. I mean, sure, there's some additional costs of like running the computer in the basement or whatever, and maybe some other compliance or back office costs. But if we just take those two very clear, like cost to post data, cost charged to post data, you're talking about like a 28x multiple. That's a very high margin. Shouldn't more of the value when users, especially when Base is being marketed. And I don't mean to pick on Base specifically. It's just they're also a public company, so I can see their financials. And by the way, I should point out it's a very small part of Coinbase's actual business in the scheme of things.
For now, yeah.
But I worry about that because they're by far the largest, and they're actually paying more in licensing fees to the Optimism Collective for the tech than they're paying to Ethereum L1. What if that never changes? What if it's
well, the thing I'll flip around is, why would every company not do this then? Like, why build your own blockchain and have to run consensus if you can use Ethereum's consensus for security, be plugged into the whole network, and then keep your profit margin? So the thing is, people being incentivized to use blockchains, having your own L2 with super high profit margins is, I think strictly superior to standing up your own L1. So the one thing it does is it brings more and more chains into the Ethereum network over time. I mean, Robinhood picked Ethereum, Base is on Ethereum, you have Sonium, etc. I just think we're very early in the adoption curve. So I mean,
we don't hear enough about Sonium, by the way. They launched that a while ago.
Yeah.
Sony,
yeah,
one of the biggest technology companies in the world. What do they do? Do you know? Just as an aside, and not that you need to speak for them. I feel like I don't hear enough about that.
No, and that's part of the marketing that we want to just show the different diverse cases you can use L2s for. I think they're working on some cool IP things on chain. I don't know enough, but cool. But some cool IP. Ant Financial is launching their L2 Jove. Mm-hmm. The thing is, if you look individually, Base is not quote unquote paying too much to Ethereum. But if you look holistically and you say that every company, every bank, like every institution, there's going to be like thousands and thousands of L2s, that'll add up. But the other part too, I'll slightly push back on is, you say it doesn't accrue value to Ethereum. I actually think they accrue tremendous value to Ethereum. They extend Ethereum's network effects. What you might be saying is it doesn't accrue value to ETH.
That's what I mean, is the ETH token holders.
But ETH is a store of value. I mean, like there's no value accrual to Bitcoin. Yeah, Bitcoin is a store. It's decoupled. It's a store of value asset that people hold in a portfolio, and it belongs in every portfolio. ETH is also a store of value asset. It just has this added call option built in where you can get some benefit from transaction fees. You can get some yield. Even if transaction fees are zero and all the ETH staked, you get a 1.5% yield. So I don't know. I think separating the asset from the actual network is important, and that's started to happen. I mean, you're seeing treasury companies. Today one of Jack Ma's companies bought ETH as a corporate treasury asset. So I think if we decouple the two, ETH belongs in a portfolio just like Bitcoin, but the L2s are the only way to extend network effects and make it so corporations are incentivized to use blockchains.
I think that's reasonable to separate. I guess my point is, because I hear a lot about the argument that everyone's going to be building on ETH or ETH L2s being a bull case for ETH, the asset, and I'm saying I just don't see that connection at the moment. I agree. To be clear, like if there are, let's say, $450K a quarter in ETH L1 transaction fees paid by Base, if you multiply that by 1,000, it starts to look a lot more meaningful. There's no doubt. Mm-hmm. And I guess that's pretty much the I think that's the most compelling retort that I hear.
Yeah,
because there's so much blob space to be used by these rollups.
Yeah,
and not that much of it's being used yet. So they're saying, look, we're building the highway for the future, and more cars are starting to drive, and when it's full, it'll be able to carry a lot more.
It's the Amazon strategy. I mean, it's your build. No one's on chain yet. No one's using on chain. I mean, that's something that we can tip
almost
the
nobody
scales.
owns crypto. I mean, nobody owns Bitcoin or ETH. I mean, you go and talk to normal people, and they're like they still just don't. No one really does. We're in a bubble. We're in a niche, not a.
We're in a tiny niche, and we forget that, and that's why I feel a lot of urgency for Etherealize, because we can hopefully be a small part of tipping the scales towards Wall Street and institutional users actually moving onto blockchain rails. If that happens, I mean, if activity 1,000x or 10,000x, it's just very hard for me to believe that at the end of the day, we're not going to have orders of magnitude more fees, and ultimately that'll roll back to ETH. But I do want to also separate, ETH, the asset it's a treasury asset. Ethereum network should be as extensible as possible. It should be as cheap to use as possible, and L2s should be as high profit margin as possible. It's the only way we're going to get real adoption. No one's going to pay to use someone else's chain.
It is interesting the debate that the argument Bitcoiners would make about the asset quality, the store of value quality, is that one, Bitcoin has never altered its monetary policy, right? It's gold-like in that sense, right?
Yeah.
And I, some of the criticisms, I've heard Danny say this too, or Justin Drake, who says it a lot, right? Which is that it's a pet rock, basically. That it's like gold, and gold is pretty much useless. Whereas ETH has staking, and so there's some yield or some APY you can earn, and the burn is an elegant mechanism that allows the APY to be earned. And the supply to stay relatively. I mean, actually, if you look at it, it's been basically flat.
It's been basically flat.
Yeah, since the merge. So I hear these arguments, but I wonder: is it how are you? What's the level of success are you having selling ETH, the asset, as a store of value versus Bitcoin? I mean, you've said you should own both. I don't necessarily disagree with that, but like when you go into Wall Street types and whomever, Bitcoin's so much easier to understand as like a gold-like asset, is it not? Or how are you explaining that?
It's another positive something. I mean, I think a portfolio should have both. I think they're differentiated. And recently, especially with the treasury companies rising and showcasing what you can do with ETH, Wall Street understands ETH pretty intuitively. They say, okay, there's this platform, Ethereum, where all assets are tokenized, and you'll have all these different real-world yielding assets and crypto-native assets on there. That's great. We understand that. That's where we'll have trading and transactions. You have this underlying asset, ETH, that gets some benefit from all the different stable coins and tokenized assets and activity that's happening on this network, plus as a yield. Wall Street, everyone loves yield.
It's incredible.
Plus it has, right now, lower inflation than Bitcoin since the merge. And it has predictable issuance. So Bitcoin has predictable supply. ETH has predictable issuance. Like, you can never issue more than 1.5%. So it's actually pretty scarce, and it's a really, really interesting yielding store value asset. And we're starting to see it. I mean, look at the ETH ETF inflows for the last 3 months versus Bitcoin. I mean, I think there's rotation going. It's not rotation because it's zero sum. It's more diversification. Like, the space is so big. I don't think there's just going to be one store value asset. I think you'll have multiple, and ETH is the next one to sort of reprice that level. So I would say we're seeing a lot of success. We put out this digital oil report, and that's been the foundation for a lot of different reframings of ETH. I think this whole like revenue price to earnings multiple meta is going away, because that you can't use that for infrastructure. You can use that for software companies. You can't use that for infrastructure. I would argue ETH's infrastructure. So people are beginning to get it, and you're seeing that go into the price. And there's a lot more repricing to happen.
Yeah, I would think of it, at least at this point, as more of like a catch-up trade, which I think is fair. And I don't mean that to belittle. I mean, ETH is up 3x since April. That's undeniable and impossible to ignore. Absolutely the shine from markets to the extent that it's on crypto has been on ETH for several months now for that reason. But ETH, Bitcoin's been making new all-time highs for 18 months. And ETH only finally broke its prior all-time high, just barely, yeah. A couple weeks ago, 2 weeks ago ish, 2 weeks ago, 3 weeks ago, or I guess I should say in like the middle of August, which I mean feels good for Ethereum people, no doubt. My gosh, I'm actually one of the other things that I had mentioned to you. I'm surprised that was the case. I thought I'd called for ETH new all-time high at the end of last year, because the shifting regulatory environment, Bitcoin was already a commodity. It was the only one that Chair Gensler had ever said was a commodity.
And that's why, though. That's why it's done so well, because it's been clear skies for Bitcoin.
I know, but I was saying once that pivot was obviously happening.
It takes time.
I guess, because it seemed like it may still be happening. I mean, I think that's fair. Maybe it just takes time. All of the relaxation of attacks on DeFi, the SEC withdrew its changed definition of the exchange rule, which was going to make communications protocols register as exchanges.
Yeah.
I actually wrote a comment letter about that 2 years ago, saying that was terrible and the SEC shouldn't adopt that one specifically. And all these things, right? The Genius Act and obviously Clarity, almost all of that is net more newly beneficial to Ethereum and its applications and ecosystem than Bitcoin, which was mostly fine. And so I think people that must have contributed to the frustration as recently as April and May.
Yeah,
right.
It did, but that's why being a little bit steadfast. It just takes time. Everyone, especially financial institutions, move very slowly because they don't have the incentive to move fast and break things. Tech companies have the incentive to move fast and break things because they're less regulated. You don't have money at stake. Here you have money at stake, and you have a system that already works pretty well. So you need a lot of signs for them to actually start moving. So it's one of the few places where banks might move slower than the crypto natives. And so, but when they do move, then it's changing the whole infrastructure for how they operate. And I don't know if Wall Street is running on Ethereum, it's hard for me to think ETH won't be a multi-trillion-dollar asset. It's just very, very hard to say that you're going to have all these tokenized assets, stablecoin activities on this whole new economy, and ETH won't be up there with Bitcoin as a multi-trillion-dollar asset.
Here's another thing I wanted to mention to you. We were talking about the L2s and tokenized assets. I believe pretty strongly that tokenized, let's say like public equities, should be tokenized on the L1 and not on L2s.
Agree completely.
Yeah, because two primary reasons. One, the optimistic rollups as sort of the main L2s today. Obviously, there are other designs and ZKs and stuff like that, but the optimistic rollups are controlled and ordered and sequenced by one company currently. And I know it's been a hope or an ambition for L2 developers to build decentralized sequencing, but we don't actually have any
We
of
don't
them.
have that. Yeah.
And,
Not yet.
and it, by the way, it's a tough technical problem, so
Yeah.
it's not like because they don't want to. And I fear that if you are trading tokenized securities on a centrally sequenced L2, that really doesn't look much different from a regulatory standpoint in my mind than like NASDAQ, which itself is, why doesn't NASDAQ reorder your transactions and cause you slippage? Well, because they're strictly regulated
they're
not
regulated.
to.
Yeah.
Right? But like, and I'm not saying that Base or Optimism or Arbitrum would, but it does feel like they can. They also can kind of arbitrarily charge transaction fees, right? And those are highly regulated in the context of stocks. That's one reason.
Yeah.
And then the second reason is that the security guarantees of the optimistic rollups rely on your ability to unilaterally exit, and which actually is most of the core issue.
Yeah.
So like I get why Ethereans are like mostly okay with that, like in the context of crypto and DeFi. But if the asset doesn't exist on the L1 because it was issued on the L2, then there's nowhere to exit to. And by the way, even if you were forced to unilaterally exit, in the context of a stock trade, that could cost you money, which is highly regulated, right? And so like, I wonder about, because you mentioned Hood. This is a great example. Robinhood said they want to do tokenized stocks on their own L2. And to me, I can't imagine that a regulator would allow that without some form of oversight and registration, unlike the decentralized L1 should need, in my view.
So I think there will be different standards. The cool part is we get to rewrite how finance is being re-architected, which is why it's such an exciting time. But it makes sense that people would start and say, okay, let's do a L2 native token, let's issue on the L2, et cetera. At the end of the day, all issuers should want to tokenize on L1 because it future-proofs you everywhere. No one just wants to go on one L2, not just the Robinhood L2 or the Coinbase L2. You want to be able to travel between all of them. And so having one universal property rights ledger, which is the L1, makes the most sense. And especially as more and more of the Ethereum landscape gets ZK-ified, which is happening. I mean, even Arbitrum, I think, updated they're going to use Succinct to move towards potential ZK integration. As you have more and more ZK-ification of the different L2s, you're going to have better interoperability, and so L1 assets can actually transact on L2s. That's a pretty beautiful architecture. So I think we're getting there. I just think we've seen a lot of initial iterations, but it's positive sum for all assets to be issued on L1 and then trade high frequency on L2s and then be composable across different L2s. And I mean, it's a really cool architecture. I think we're going to get there. That's something that we believe very strongly in as Etherealize, and we're going to help facilitate that. And we also say tokenization should happen on that.
I think if you issue on the L1, that makes a lot of sense. And then you potentially could unilaterally exit.
You could unilaterally exit. You can standardize where your contract lives and then travel across the Ethereum economy. It's more composable with DeFi apps everywhere. It makes all the sense in the world, and I don't think it's going to be that hard of a leap for people to get there. I think to start, people want walled gardens to start, to know that they're safe, secure, everything, and then the point of Ethereum is to future-proof and open up to broader distribution and to a global audience and to more permissionless networks.
Yeah, I like you've talked about doing this in the what do you say, not regulated way, but regulated way, but also the responsible way, right? Like for tokenization in particular, because, we see some, and I get why, because it's been a real slog with the prior regulatory environment, but like these offshore, like wrapped equity structures, to me, like you could have done that at any time. In fact, people used to do that with CFDs and stuff and have their domains seized by like Homeland Security and like, right? I mean, like not in the context of blockchains, but
in general,
offshore stock trading platforms, like those have been a thing for a long time. And I really want to see, I want people to be focusing on how to, regardless of the architecture or the infrastructure, focusing on doing it in a way that brings the SEC along with them, because that's what could be durable, right? We don't want to
That's the only way we want to do things. We want to do things in partnership with institutions, in partnerships with regulators. That's why we made such a big policy push. It's because everyone wants this to happen, so let's do it the responsible way. And yeah, let's not use wrappers on wrappers on wrappers. My heuristic is if any of the actions we're doing makes the financial system worse, then what are we even doing here?
Yeah.
But there's native tokenization actually working on new standards and setting new principles like tokenization on L1 and being able to trade on L2s and having ability to exit to L1, having future-proofing towards like where the markets just get better. I think we can do that now. I think that window is now open. So I agree completely with that.
we talked about a lot here. It's been great, Vivek. What else should we be excited for? I mean, I know I don't know if you mentioned ZKs have some ability here as well. You guys plan to build some zero knowledge technology, it sounds like. That or what else should we be looking forward to from Etherealize for the rest of the year?
I think privacy is a really big thing, and it's because just like everything, I mean, it's the perfect storm of positive catalysts finally after a lot of negative catalysts for a lot of years. But privacy was largely illegal, and people didn't want to touch it. And the problem is, when you talk to any institution, they're not going to operate on fully public zones. That's just a non-starter. You need to protect customer data. You got to protect trades. You don't want the whole world seeing what you're doing.
We're not going to be able to follow like John Q. Smith's wallet on Arkham.
Unless they want you to, but
Right.
it needs to be optional. It needs to be, and that's the important part. Is it needs to be optional and customizable. You have a lot of things that are just fully private with no ability to be public, and you have most blockchains are just fully public. So there's just a huge design space now that privacy is finally allowed, and even the SEC is saying that you should have privacy on blockchains to build customizable privacy, and that's something that that we've gotten the best ZK players in the world together on. I mean, Danny is leading the charge on this along with Zach and saying, let's upgrade the privacy stack so we can have optional privacy for tokenized assets for institutions that want it. You can have things in public, and that just recreates the financial system pretty well. ZK is such a playground that I don't know. I think the potential for ZK is as high. It's synonymous with blockchains, but it's as high as blockchain. So being on the forefront of ZK development is a very, very high priority. So it's going to be a big proponent of all the products we create.
Yeah, very cool. And when I first started looking at ZK, and I know they're technically different, but ZK didn't really exist. It was only homomorphic encryption.
Yeah.
That was only like 7 years ago. And the stuff that people are able to verify with zero knowledge proofs today.
It's crazy.
It's so far beyond where we thought we would be. I remember when I first started looking into this, and that's because of blockchain development.
It's blockchains were like a playground for ZK development. It led to like the hardware acceleration. Now you can use GPUs to do ridiculous ZK proofs. I mean, yeah, it's all weapons grade in the best way of technology. But yeah, ZK got developed because of blockchains, and the ZK space probably extends past blockchains. AI can use ZK for like verifying models and everything. But the real product market fit is with blockchains for scalability and privacy, and so we will use them for scalability and privacy and educate policymakers, educate institutions, and say this is how we get to like the ultimate blockchain vision. So,
well, it's very cool. It feels like Ethereum narrative has its mojo back, and I know a large part of that is because of you and your team at Etherealize, Vivek.
Appreciate that.
Congratulations on the new raise, and I can't wait to stay in touch and see what's next.
We're gonna hopefully build a lot together. So yeah, cool. Thanks for having me.
Yeah, Vivek Raman from Etherealize. Thank you so much. That's it for this week's episode of Galaxy Brains. Thank you to Vivek Raman from Etherealize and our friend Beimnet Abebe from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week.